The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Morning, folks. Tommy O'Brien. My dad, Tom, is away for a couple more days. He is up in Toronto meeting all those beautiful gold companies up there, getting some good information on them. He'll come back with some good information. And I am again joined by our man, Basil Chapman, this morning. Basil, good morning.
Hi, Tommy. How are you?
I'm doing fantastic. How about yourself?
I'm always marveling at how your father gets so much information in those 5 or 6 minutes.
It is quick, right? I know.
It's so
round
quick.
and round the world in 5 minutes, for sure.
Amazing. Fabulous. Yeah.
Well, jumping round and round the world, let's just jump right into it. We have the markets negative a little bit. We got the Dow down about 23, trading at 20,931. I heard your 5-minute update coming into that gap, which is interesting for sure from March 1st. S&P 500 down 5, NASDAQ down 8, oil's up marginally, 36 cents. Silver's down a little bit. And with the markets moving, volatility. How about we go to our man, Mr. Kevin Hinks, TD Ameritrade. If you haven't checked out the show, 12 o'clock noon, swim lessons. Kevin Hinks, Scott Connor, they're talking options. And let's see what we have going on in the world today. Kevin Hinks, good morning.
Good morning, Tommy. Good morning, Basil. How's everybody doing?
We're doing
Hi,
well,
Kevin.
man. So I was listening to yesterday's swim lessons, and I heard that wonderful IMX number. So give the listeners maybe a glimpse, because that was a big number yesterday, man.
That was a big number. It was the first time that number's come in over 6.
And explain the IMX just for people not familiar with it, Kevin.
Sure. The IMX is a proprietary tool made up by TD Ameritrade, which takes our 6.5 million accounts and measures. It's really, the IMX is Investor Movement Index, and it basically gives you a reading of did traders over a large sample size increase their positions, decrease their positions, and we give individual names that were net bought and sold over that month. So
Talking about
it's just a wealth of information.
I was going to say big data, right? Big data.
Right.
It doesn't get much bigger, and you're talking about real supply, demand, who's buying what. And we talked to you Tuesday, Wednesday, Thursday, so I'm always listening to swim lessons. I didn't even realize that number was coming out. My ears perked up right at the beginning of the show when I heard that was coming out at 12:30 Eastern time. That would have been our time yesterday.
Right. It's always fun to go through the numbers and check the hard numbers, like case in point. Even though Apple is the number one held stock at TD Ameritrade through our customers, it was for the second month in a row, it was net sold by customers, which means more people. It doesn't mean people dumped their position. It doesn't mean the company sold out of everything, but it was our clients sold more Apple than they bought on a net basis.
Yeah, I mean, collectively, right, TD Ameritrade, Thinkorswim was a seller if you combine all those accounts for that month.
Right. So it's interesting. And what it shows, what the best part about this number for me is it shows that the retail investor is becoming more sophisticated, right? You're seeing TD Ameritrade customers lighten their positions on the upside when things are going to new highs, and they're buying dips in the stocks that are underperforming.
It was great because you were going equity by equity and industry by industry, and it was making perfect sense, man. It really was interesting, right?
Right. You looked at the graph of those stocks, and as we're talking about them, we're putting them up on the screen, and we're seeing, look at this stock rallied to new highs like Apple did during the month of February, and TD Ameritrade customers were net sellers of Apple.
Smart traders said, you know what, I'm going to take some money off the table at those highs, and then in the same way, I think you were going over, was it Macy's that they were net buyers?
Yep. Macy's, they were net buyers, which is a little counterintuitive because the retail stocks have been so beaten up. But then again, when would you buy?
Exactly. They're looking for value, right? And after that decline, there might be more value than at the highs of a stock like Apple. That's, man, the run that these stocks have had, for sure.
Right. And Macy's is a stock that we cover extensively in swim lessons, and it's had some bad news, and the whole mall sector and the retail sector has come under a bunch of pressure, but yet this stock has been relatively strong.
Yeah.
During that sector, because they've got other things going on. They've got a lot of real estate and things like that. So it's just fascinating to watch and to see what net customers are doing.
And they're making just the Macy's. They're making those strides, as in they came out with those huge closures. And maybe that's what you make that type of 1,000 hundreds of stores closing.
Right. And Tommy, think about it. And Basil, you know this from watching. There's a new economy out there. Amazon's changing everything, and corporations and retailers are racing to catch up and to compete in the new Amazon world. Because millennials, they don't shop at malls like they used to, and mall traffic is down, and they have to deal with that. I read an article this morning that's talking about grocery stores going into malls.
I saw that. I saw the headline of that article. Yes. If you're going to be shopping for clothing and groceries simultaneously, right?
Yeah.
What's also become fashionable is to have these pop-up stores so that they can try out for 6 months or so whether or not it's working. And they really, it's a simulation of a
There'll be a lot
store.
of experimenting with different ideas, I think. But yeah, food is one of the things that they're still trying to, freshness, you have to go get it. So it would make sure maybe that is something that'll drive people to a physical location. Well, Kevin, lots of great information, man. I learn something every day I'm listening. Swim lessons, 12 o'clock, right here with Kevin Hinks. Kevin, thanks so much, man. Have a great day. We look forward to the show.
Great to talk to you guys. Thanks for having me.
You too, man.
Thank you, Kevin.
Awesome. Come on back, folks. We'll be right back. We'll see if this market can stay in the red for today.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Basil Chapman. We get the markets pretty relatively calm, slightly negative. Gold slightly negative, silver, oil trading slightly positive. Pretty calm markets, Basil. It is interesting that we are coming into that gaps. I mean, we're about almost 250 points, I think, approaching off our highs in the Dow now. So we'll see if we finally ever get any acceleration to the downside. It's been a while before we've had something more significant than a marginal day.
I thought that I would talk about a couple of things if you got the time. Unless there's something specific that you're looking at for the 10:30 time frame, is there any report that you're looking at?
Nope, there's not. Unfortunately. Okay. Oh, you know what? Actually, I'm sorry. Before we do that, we do have a caller. Let's talk to Mike, our man Mike from Somerville. Mike, good morning.
Hey, Basil and Tommy. How you doing, guys?
Mike, I was happy to see you were calling in, man. Good morning. We're doing well. How about yourself?
Hey, did you finally put your father out to pasture?
Nah, he's out for 48 more hours, and then we're gonna get him back in here, raring to go, and he'll be charged up after he's in Toronto at a gold show, one of the biggest in the world, and man, they are getting some beautiful weather up there right now, fortunately. So 40 degrees in Toronto in Canada, that's a good deal.
But that's cold for Florida.
Right. Yes.
I heard you say that earlier. I just, you know me, I got to just give a little joke there.
Of course. So what are we looking at today, man?
Listen, Tommy, just had a question. I actually just put the trade on, but when I went on Nadex, it's not showing me the price of the gold. Can you explain that to me?
The indicative sometimes? Is that what?
Yeah, it's happened to me before. Like when it tells you what the price is, it's not there right now.
I do. I'm jumping around myself. So I jumped up into the spread. So we're looking at Nadex, folks, and you just want to always be checking this stuff. I'm trying to see if I can replicate it. So gold right now, we're looking at the April contract. It's trading at 12.1820, Mike, right now. And I'm looking at the spreads. Now, you traded the binaries, is that right? What are you trading here?
Yeah, actually, Tom, it just came back. I'm looking at it now. But
okay, good.
It wasn't there.
Yeah, it's, of course, everything's completely regulated, your money's safe, but unfortunately one time or another, and I'm sure you've seen it happen with us, that the indicative index may not be loading, and you can still trade it. There still might be a market because, of course, gold still has a price, and I'm just not sure with maybe that's a cash issue within the platform or if it's a data issue. I'm not sure, but, you just want to be, yeah.
No, it's just like I said, I did put the trade on. I went for the 1220 daily.
Okay.
I went to Gold Line, which I know isn't updated, but I just wanted to do one contract, and
sure.
But I did the trade anyways. But like I said, it wasn't there in Nadex when I did it. You know what I mean?
So what is the bias of the contract you're looking for?
I'm just looking for it to go to 1220.5 by 1:30 today, Basil.
1220.5,
okay, so
perfect. Yeah, so I have the chart up, Basil. Even I'm sure you have it in the den. So it looks like, Mike, that's trading like 22 right now, 17 by 22. Is that what about you got in at?
I didn't know what it was, Tom. That's what I'm saying. I didn't know.
Well, no. So the indicative, the bid offer, right? Do you know? I mean, that's what I'm saying. The bid offer would have been probably trading for you to initiate a position, but just you couldn't see where gold was trading at. So you probably put up risking 23 to make like 76, something like that.
No, actually it was 30. I think it was 36 at the time.
Okay, that's what. So it's moved. So you're risking 36 to make about 64, risking 1 to make about 2, Basil. So that's the trade as these, and what'll happen is so 1220.5 is going to be your strike price, Mike, right? So right now we're looking at it trading about 12.18. So you're $2.50 below. That's the reason why, of course, you're risking less than you stand to make, because it's technically out of the money. So when that reaches the 1220.5, you can assume it's going to be oscillating right around 50, right? Because give or take, it's going to either close right above or right below, and it's at the point. So theoretically, it's a 50-50 chance. So it'll be trading right around 50, and that's where you can always trade out of these. Do you ever trade out of these, or do you like to just hold them until expiration?
You know what, Tom? I talked to you and your father that day, and I'm on the iPhone, Tom. And
Sure.
no, to answer your question, I usually just let it go all the way to the day. Right.
Sure. And that's cool. No, I mean, that's an okay way to trade them, because if that's, a way that you feel it's going to go, then you can always exit out of it. But just, so we'll see where it trades out. But, it's a low risk, high reward trade.
So
And go ahead, Basil.
I was just going to say, what I have on my 2-minute chart is I have a volume spike right there on that low that was made at 9:34 this morning with a low of 1215.8. The technique that I developed a long time ago, which you hardly ever get to use because it doesn't happen that often, is when there's a volume spike of significance and it turns out that it has the potential to be a low, I don't say the low, but a low, then the chances are that you're going to go rallying for at least 28 bars. If you take out a significant high, it could go to 52 bars. This is a 2-minute chart, so there would be 2 minutes, 100 and something minutes. But what I'm looking at here, there should be a leg D. I was looking at this like a few minutes ago when Mike was just starting to talk, and 12.18 point, this trades in what, 10 cents or 20 cent increments?
25-cent increments is, I believe, what it's trading in.
I don't have the fives. I have the zeros. Well, whatever it is.
Sorry. You're right. Correct. Well, I'm just looking at it's trading by like 1,000th of a tick, actually, gold.
There you go. Okay.
Yeah.
So it should hit 12.19, and that should be it should hit 12.19 within the next minute or so. And I've got the resistance, the target, the little circle that I drew in while I was doing it earlier on is right there on the trend line, and that says 1219.30. If it can move above that, and the MACD and stochastic are still looking good, and the histogram, those vertical lines are positive, I would say that it has a chance to get to the top of this ugly candle from 34 minutes past 9 this morning of 1219.5, and if it takes that out, then in fact it could go to your target. But that's going to be the key. That can it get through that leg D and push higher? But so far it's acting very well.
Oh my God! How great is that I just had Basil pipe in, Tom?
Right? It does not get any better, Mike. He's not far from where you are, too. You guys are both braving that beautiful Massachusetts weather today, so you're all set.
Oh, guys, Tommy, you guys are the best.
Mike, it's always a pleasure to have you call in, man. We appreciate it.
And Mike, Somerville's amazing. We drove through on Sunday, and the buildings in that Assembly Squares at Assembly Square, man. A lot of new buildings. Oh, he's gone. Anyway, he knows.
He's off to go manage that gold trading. Keep eye on that 12.19 level.
12.19, excellent. Nice.
Yeah. So, Basil, we were starting to jump around. We were talking about the Dow, and you were going to go into something else when we jumped to Mike in Somerville. Yeah,
so there were two things I wanted to talk about. One is a technique that I've been working on for, it's at least, it must be going on for 2 years. It's kind of a technique. I always like to try techniques out in real time for a long time before I make it an official technique, because sometimes you think, oh my God, I've got this magic lamp, and and the next thing you know, when you put it into practice, boom, it doesn't work. So I like to just test these things. What I showed subscribers is that we've got a Chapman Wave 5 completion at 21,169 the 1st of March, and we've come down. We have just made the leg 5 down, and now we should rally. And there's another technique I was going to talk about. So when we get back.
Okay, we'll see. We'll see if we have that rally from the leg 5 down. We'll see what these markets hold. Basil Chapman, Tommy O'Brien. Come on back, folks.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and we're green again in the Dow. Faith is restored and everything is back to normal, Basil. It looks like we should have gotten that analysis in before the break because you were talking about maybe bouncing, and of course, now we're positive. Go ahead.
So, okay, I must add, I'm looking out my window, my office window, and the house on the corner is, I figured the other day that this is going to go for sale because I saw some pictures being taken and all that, and people don't usually take pictures of their houses unless they're about to put it on the market.
Sure.
And now I'm looking at all the real estate agents lining up, they come and view the house and they can show it. So we've got the Audis, we've got the BMWs, we've got the Cadillac. That's very unusual. The Cadillac with a real estate, that's very unusual around here. And we've got the Lexus down there and a Jeep. Wow, how did the Jeep sneak in there?
You got everything. The whole crew was out in your neighborhood checking things out.
BMW coming up right now. So this is the state of New England right now. Not New England, but the Boston area.
Good. Springtime real estate, right? Everyone's getting ready. There you go.
I'll tell you, and it's going to look beautiful because we've had a very mild winter.
There you go.
So we're looking at leg C in the 2-minute chart. What of the E-mini? Let's get out of this. What I wanted to show you is this. The technique that I had suggests that there could be a wave 5, and now we've gone to the 120 minutes on the left. These are both the same charts, what I've done for subscribers for a while now, because I love to have my newsletter to be an educational device. So I always explain what we're doing. It doesn't always work out, but this is what I try to do, to say there should be a wave 5. Now, that wave 5 just snuck underneath the last low of 20,912. So you've made that second arch. You see the little arch that I've drawn there in the right side chart? Sure. It's the same thing. It's the Dow 120-minute chart. But look at the MACD. It's very, very weak. Look at the stochastic, finally getting a little bit of support at 21%. So that says, yep, maybe we can have a bit of a bounce. Now, what's really interesting about this, you've got what I call a Chapman Wave falling axe pattern. I like to give nicknames to these things. So this is just a series of declining lows and much deeper declining highs and much deeper declining lows.
Sure.
And eventually you get a trend line. We're about to test that trend line. We'll break the trend line if there's a move up to 20,980. Now, what's really interesting about this is there's another technique that I've developed a long time ago. and I used Richard Arm's index, his short-term trading index. This is called I call it my Chapman Wave chin gauge because I only use the numbers that he's produced. But basically, it's adding up the highs and the lows at a certain time, and you calculate it. So this is what I give. And this I love to call this my quadrant. But of course, there are 5 little groups here. And there's the Trin index. I just took off the one for today by mistake. Sure. This is from yesterday, and it went high enough yesterday to give me a signal that says within 2 sessions. That's from yesterday. There should be, in the S&P futures, there should be a rally of at least 9 to 11 points.
Okay.
And that should reflect positively on the Dow and the S&P. So now let's go to the S&P right here. Let's go to, say, the 10-minute chart, and we'll count the points. So the low today was 2366.25, and we're trading at 2374. So we've already got our 9 points. So that's a technique that this is a proprietary. It's not so much proprietary anymore because people see it, but it's something I developed a long time ago. But within the context of the markets, Kevin was talking about Apple. So let's look at Apple. Apple, one of the leading stocks that consumers, market consumers have. I'm not talking about physical. I'm talking about the stock. It's one of the most popular stocks for investors. It's made a peak E, but look, it's holding really well.
Excuse me.
And look, the weekly chart is in leg E/B. I suspect
that weekly chart is really something else. But go ahead.
The MACD is steady. But what's even more important is I'm going to expand this middle chart, which is the weekly. Look how the stochastic's at 97% and refuses to break down. 97.91 means it is $1.11 was 91. $1.09 away. Is it $2? Yeah, $2.09 away from 100%, which is you never get 100% in the stochastic.
Sure.
So this is amazing. So the only way that this can change is to go down, but it doesn't have to go down right away. These things have a history, especially weekly charts, of holding very well. So it's going to be the daily, and this is the reason. This is why I didn't want to get overly short anything other than we have a sector that we're short. But other than that, and certain stocks we're trying to short, but that's individual. What I'm really looking at is if I go to the Investors Daily, for instance, I was looking at a stock last night. This is Thor Industries.
Okay.
So I looked at it and I said, oh my goodness, leg D, recreational vehicles, but the technicals are starting to wane. And I had it all ready to put on my subscribers Traders Corner. That we have all our positions.
Sure, within your Chapman Wave, opening call.
For a potential short. Why? Because of you see these tiny little candles, these 3 lost candles. That really shows some kind of insecurity, some hesitancy. And I thought, you know what? If we're able to time this right, we could play it as a short. And when this morning I went to actually put it on as one of our positions, I'm looking and I'm saying, what, down 4 points? What the heck? Oh, and then I said, it must have been earnings. Well, the earnings did come out.
Okay.
Earnings are disappointing.
It looks like it, right? Yeah.
So, but the reason why I wanted to use it is it was a fantastic example. I don't know if you heard, but I had calls last week. I had an email and then some calls about AU, which is Anglo Gold Ashanti.
Sure.
And what I'd said, the caller wanted, or the email wanted to know, is this a place to buy? And I said, no. I've done some work on it, and it's a technique that I've actually had webinars on, which I call the Chapman Wave Unconventional Flat-Based Restarts. And some of my titles are very cumbersome, but they explain exactly what we're looking at. So what are we looking at? I have a technique called the flat-based restart, which uses the Chapman Wave instant restart from peak D. But what happens is if you go up and then you start to keep coming down, you don't take out your low of D, but you can't go very high without retesting this whole area of the takeoff point. It says when you get to a D or an E, watch out, you are coming back, and you're coming back sharply. The unconventional one says that the low that was made in this case and that's exactly what happened with AU. Look, it's gone from the highs of 30 down to 10. Right, so I'm looking at this, I'm saying, oh my goodness, unconventional restart right there. So I'm saying to myself, if this comes back, it's going to take out this low right here of 109.05, and it's going to do it very quickly. But in fact, my target would be the low before D, which is 108.09. I tried to do it. I said to subscribers, let's try to short if there's a pop-up to 113. We didn't get it. It went to
close.
111. And 111, round number open. Another thing I look at is round numbers. And kaplop, it's down 8.67 at 106. So that's a technique. The relationship of AU, Anglo Gold Ashanti, to Thor was exactly this, what I call the unconventional flat-based restart. Unconventional because the low that I was expecting would take out this. You see this peak D with 109.34 leg D on the 15th of Feb?
Sure.
I was expecting that low right there at 109.05 was telling me, this is unconventional. We've theoretically not really got an instant restart because we've broken the signal to take off. That makes it even more potent on the downside. Missed that, but the technique did work.
It's, anytime it's sputtering at the top like that, right, where you're seeing those three little bars.
It's a hint.
It is, for sure. All right, folks. Dow is positive 7 points. NASDAQ's positive 7 points. S&P is -1. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Dow is flat, NASDAQ's up 8, S&P is down 1. And let's go to our man Mike in Dallas. Mike, good morning.
Well, good morning.
How are we doing?
I've always wanted. Hey, we're doing good. Just a question for both of you.
Sure.
Have you ever used, for charting purposes, have you ever used range bars or tick bars as they are displayed with Ninja?
Myself personally, I'm just really used to candlesticks, and they're just so easy for me to get a visual feel for where things are kind of on a basis of the open, the close. Basil, how about yourself when it comes to trying?
I've used. I wonder if I can find it. Let me see if I can do this, because I have.
Just while you figure out,
I don't think.
Is there a reason why, Mike, that you look at those versus, like, it seems like candles are almost for the charting almost not standard, but they're just so quick to understand where they represent a lot of information very easily visually.
Okay. All right.
Because I've used them, and I've used them together with the trin and the volatility index. I was trying to find, there's a template that I have. I won't be able to find it that quickly because I've changed it somewhat. I've tried to make it a little simpler, and I used it because I wanted to see if there was a. If you watch the cash index and you watch the futures closely, I think the difference between the speed, and especially if you also have, like I have the Dow futures and the S&P, the speed with which one of them moves on any day quicker than the other, for me, gives me the same heads up that the that a tick would do. In other words, the tick is going. It's every single tick. But I found that I have to use the tick as a line rather than as a price. And if I used it as a line, it did give me some help. So I'm just going to make the suggestion that whatever technique you use, be consistent, follow it, and develop your own pattern, just as I did with the trin gauge. It has nothing to do with Richard Arm's initial concept of what he uses the trin gauge. In fact, every time I ever heard him interviewed, I had a completely different opinion to what was going on. Whether it's right or wrong, it doesn't matter. So develop a technique that you use over and over. Like if you listen to Tom's used volume. As long as I've known him, he's used volume. And he just does it over and over, and he does the same thing. He just has a fantastic feel for what it means for him. And I think that's really, but that's what he's going to teach when he does his course, I'm sure.
Okay.
I'm sure there'll be plenty of volume in there, right?
Yeah.
Okay. Well, thank you both.
Mike, thanks for calling as always, man. Have yourself a great day.
You too. Bye-bye.
Okay.
So there are a couple of things, talking about Tom's course. I've got Tom's book. I was going through it. For all of us, we have our own techniques and our own techniques.
Sure.
And then
no matter what you follow, right? Even if you choose to follow one person more specifically, you're going to take some nuance to what they do and add something or subtract, definitely.
Right. And what I love is when I always go back to when I used to be a professional musician. I was a clarinetist and I conducted, and when I had a student, say, playing a Brahms clarinet sonata, and then they'd stop, and then they'd look at me as if to say, how was that? Or I'd always look right back at them with the same basset horn, quizzical, basset hound.
Sure.
Look, that quizzical look, and I'd look back, and then they'd look at me, and I'd look at them, and then I'd say, you got to tell me, you're playing it, you got to present it to me like it's your idea.
Right.
And that's what the techniques that here at TFNN,
you got to own it,
so
right?
fantastic. You want the person to take it and make it yours, so that I have to now go to you and say, gee, with your techniques, what can you teach me? Because that's the way it is. And it's really important. And I love the fact that, that's the thing about Tom. He's allowed everyone just to freely discuss what they've done, develop what they've done without interfering, without doing anything. And I think that's been fantastic for listeners. I mean, really, what more could you want?
Oh, for sure, because nowadays, too, that volume number, it seems like everybody talks about volume, but that was not the case 10 or 15 years ago in terms of driving a lot of analysis.
Well, it's all, not only that, it's just how Tom uses it. Over the years, in fact, there was a question I was going to ask him the other day, how he's modified, just even if it's slightly, his use of volume since he wrote the book, so that he's got that core, but there are a couple of little subtleties that he's added. That's the important thing, is how do these things develop over time in real life?
No, I bet he could put out an amended, updated version of that book once a year, right? We'll get him on it. I know he's in the den listening. Maybe he can start working on next year's updated version as we're speaking.
That'd be fantastic.
Perfect.
I know that I know how much time I took for my CD book. I mean, it takes
that's what I almost kid, right? Because we both know the investment and time and to put that together.
And then you're going to proofread, and you go, oh, it's just incredible.
So, Basil, what do we have coming up for your program? What are you looking at beyond the indices today? Any equities in particular or commodities?
I tell you what is important at this particular point. I started doing it yesterday. We just made a peak D in the 2-minute chart of the E-mini. So let me, now that we've concluded that big move, I wanted to show you that. I know
we've gotten some decent action this hour in the markets as we're chatting.
That's terrific, right? So the Investors Business Daily, the top 50. I like to just take the top 10 or 15 and focus on them.
Okay.
So NetEase has made a peak G and it's pulling back. This is number one. No big deal. The MACD and the weekly chart and the monthly are still fabulous. But NetEase is advertising, just been an incredible machine to the upside. Except now it's starting to digest these gains. Number two is NVIDIA, NVDA. It made its peak just recently at 120.92 on the 7th of February, and peak F in the weekly, E in the monthly, and I'm watching this really closely because if at 99, if at any point in the next month it starts to test the 86s, that's a monthly serious, and that it goes straight to the semiconductor index.
Yeah.
So I'm watching this. If it holds well here, that's going to be good. And I just keep going through them. Thor, which is the one that I spoke about, is number 5. I'm looking at, and then Kevin brought up Apple. Well, Apple, look, it's at the top. It's trying hard to break out. It can't break out. It's not breaking down, but the technicals have started to slide a little bit in the daily. Weekly is still good. So I'm looking at this and I'm saying at this particular point, I still think we're in a high-level consolidation. That's number one. Number two is when we do pull back, and I think that the bigger move now is not a break to the upside of a few hundred points in the Dow. I think it's more towards testing on the downside. This is my thinking at this particular point. It's going to be very sudden. So we're going sideways. It's what we call distribution.
Sure.
And then suddenly there'll be a bad news event. But you will not get a sustained down move unless two things happen, in my opinion. And the first is the Dow has to really break the 20,600, 20,500 key support, and that's going to be important. The 9-period moving average in the weekly is at 20,469. That's support.
Okay.
The volatility index, which has been fooling everyone who's wanted to hold anything based on the volatility index, just keeps coming down, but it's having rising lows. So until the volatility index, which is at 11.32, goes into the 13s and holds, together with news that's perceived as bad news. It could be good news, but it must be perceived by the market as bad news. That's the only way.
We haven't had any of that recently.
And we just haven't. No.
Yeah, and it's amazing when you see just the unknowns out there in terms of just the economy and not having anything.
Or the headlines that just get dismissed.
Right, I agree. We'll see what happens. All right, folks, come on back. We got one more segment, and we'll see where the Dow ends up. We're positive by 8 points right now. 3 minutes. Come on back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Basil Chapman, Tommy O'Brien. Basil, I'm just going to jump to this Nadex real quick that I have. So I was looking at this gold trade that we're talking about, Mike in Somerville. So he was trading that 12.20.50 level, right? We're still trading. We're looking at the April contract at about 12.18.50. And the only thing I was going to mention, and this is just kind of a trading thing, a trading methodology, is you always want to be like evaluating the trade if that's what you planned, right? So Mike gets in here, he's thinking, you know, I'm going to let it go until 1:30, and that's a great trade where you've analyzed the risk reward at the get-go of a scenario, you know, and you make the analysis that if I hold this for 3 hours, in the long run, I expect maybe a market bias to pop $2 more often, as in not more often than not, but if you're risking 33 to make 66, you know, you only need to be successful 40% of the time in that trade, maybe, or something like that to be profitable. But then what happens, right? So it's just been bouncing for like the last, since that spike down, really, between 12.17.50 to 12.19 almost, 12.17.50. So my advice would be, when you get that, right, maybe there's a chance where if if Mike happens to be watching this trade and you're approaching 12:30 to 1 o'clock, and you're still kind of $1 below that level, maybe you haven't even touched that level since like 9 o'clock this morning, that's a time where maybe if there's value still in that trade that you maybe consider taking it off. Because, and the reason why I mention it is, would you have made that same trade? As in, would you come in at 1 o'clock in the afternoon, right, and be risking money with a half hour to go where it hasn't touched 12.20.50 all day since approximately 9 o'clock in the morning?
So that's a fantastic point that you just made. It's a point that many people forget to ask themselves.
Right.
When I get a call...
Oh, and as we say that, it's popped above those levels, but go ahead.
So I'm showing the chart right now.
Okay, perfect.
We'll talk about that in a second. What I wanted to say is about your point is that when I get asked a question, I have to always say to myself, forget about the bias. The only question is, would I buy it? Would I short it? Would I leave it alone?
Right now, right now.
Right, exactly
in
where
that
it is.
moment.
Not yesterday, right at that moment.
You know,
so now what I'm looking at is, do you see the 9-period moving average that's held? It went to the peak D. What's the objective in the Chapman Wave? Let me slide this across right here. Actually, this is not a good addition, but this is the objective is to get you to a peak D. Well, it got you to the D, and now it's pulled back. But look at this trend line. Remember when I said 20?
Yes.
If it can hold for 28 bars and go to a new high, and it's important, it would have to go above, I think it was the 12.19.50 level.
Yes.
That says that it could go for 52 bars.
And we're
that's
at
going to be very
12.19.50 right now, Basil.
And it's trying, and it's holding very nicely. So I'd say exactly, if it's getting close, unfortunately he has one. If he had two, I would say take as much as you can off the first time, and then just have a spec for the rest one, because at 1 o'clock, This is the 12 o'clock to 1 o'clock for the dollar and gold. Very often, that is where some people start putting on new positions. I've noticed that.
Sure.
So that could be the second trend. But I'd be real careful. If it gets to 12.17, I think it has a problem.
Yes, no, and I would agree. And that's why I just happened to glance at it during the break, and I saw maybe it was just going to end up in a little trend. And, there's plenty of time left right now, as in it's only 11 o'clock. He has 2.5 hours left.
Correct.
But just as that approaches the end of that expiration, you're going to have value in here, and you just always want to be considering, would I make that trade at that exact point? Because there's not as many barriers to exit and entry to really initiate, to where the hold position is, there's very marginal exit fees to differentiate between a hold
Correct.
and a sell or a buy. There should be a buy or a sell. I always kind of talk about
it's
that.
The end result is the number that you got to count on, yes.
And
but my biggest thing is that the trend, that the actual tide itself seems to me in the daily still to be down.
Yeah, and we'll see. I mean, that pop, it's interesting that it popped while we were just talking about it. But yeah, it hasn't gotten too much action really off of that lower drive at 9 o'clock in the morning. There hasn't been much. And until the last 5 minutes, though, now we're above 1220. So that's a perfect way to end it. Mike, I hope you're listening. Manage that trade. I hope it goes well. Basil, thank you as always. I look forward to the Tiger Technicians Hour at 11 o'clock, and have a great day, man.
Thank you, Tommy. Great.
My pleasure. My pleasure. Thanks, folks. Stay tuned. We got Basil Chapman, swim lessons, of course, Steve Rhodes, Dave White, and we have a great lineup with, I believe it is, Steve Rhodes and Mr. Larry Pesavento this afternoon. Have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.